This hearing will come to order. Welcome to the third hearing of the Congressional Oversight Commission. I want to welcome the Treasury Secretary back. Good to see you again, Mr. Secretary. The Commission was created by the CARES Act to provide oversight for temporary emergency lending authorized by Section 4003 of the CARES Act. Section 4003 authorized the Treasury to spend up to $500 billion on loans, loan guarantees, and other investments, and I quote, to provide liquidity to eligible businesses, states, and municipalities related to losses incurred as a result of the coronavirus, end quote. Today's hearing will focus on the Treasury's National Security Loan Program. The CARES Act provided Treasury with $17 billion, and I quote, to make loans and loan guarantees for businesses critical to maintaining national security, end quote. To date, Treasury has made $736 million in national security loans to 11 companies. $700 million of that went to a single trucking company, YRC Worldwide. Our sole witness today is the Treasury Secretary, Secretary Stephen Mnuchin. Again, welcome, Secretary. Thank you for joining us. I should point out the Commission also invited the Department of Defense and the Office of the Director of National Intelligence to participate. The Defense Department responded that it is unable to attend this hearing. As a result, the Commission plans to host a separate teleconference with DoD regarding the National Security Loan Program. DoD is currently resisting making public the official transcript record of that teleconference. The Commission strongly urges DoD to reconsider that position. The Commission and DoD have a responsibility to inform the public how taxpayer funds are being used, especially given the concerns that have been raised about the YRC loan. The Office of the Director of National Intelligence also responded that it has been unable to attend this hearing. That said, ODNI has told the Commission that it has not designated any company as, quote, critical to maintaining national security, end quote, nor has provided any input with respect to any DoD company designations. This Commission currently does not have a chairman. In the absence of a chair, the Commissioners have agreed to each give a 1-minute opening statement, followed by 2 5-minute rounds of questions. I will serve as acting chair for this hearing, and I now recognize myself for my opening statement. In March, unprecedented turmoil in credit markets threatened the ability of businesses, states, and municipalities to obtain capital. Credit markets were on the verge of shutting down, and without intervention, private credit was very likely going to stop flowing to businesses, states, and municipalities. Congress did not want these economic disruptions to result in gaps in our national security. There was a very real concern that established national defense firms, essential national defense firms, could even collapse. The CARES Act program announcements succeeded in stabilizing the markets and averted a crisis in the national security sector. In fact, the top 5 national security firms raised over $40 billion in bond sales since March. So since creditworthy firms have generally been able to access private markets, only those with lower grade credit or limited access to credit in the first place appear to have applied for national security loans. Of the 11 businesses that have used the National Security Loan Program, 5 had negative profits in 2019 before the coronavirus struck. At least 3 are early-stage companies, including Spin Launch, Inc., and essentially pre-revenue venture whose products are commercially unproven. While I'm glad that the national security sector is now stable, I would like to understand better why the Treasury made loans to what appear to be startups and what may have been or close to a fundamentally insolvent company like the YRC. These loans, the question in my mind is whether or not these loans adhere to the criteria set out under the CARES Act and whether or not they were a prudent use of taxpayer funds. I will now turn to Commissioner Ramamurthy to give his opening statement.
Thank you, Mr. Chairman. My questions today will focus on the National Security Loan Program, but in my opening statement, I want to address Secretary Mnuchin's termination of the CARES Act lending programs. Despite the Secretary's claims, the CARES Act did not require him to end the programs this year. The Secretary admits as much when he says he based his decision not on what the law actually says, but on his interpretation of Congress's intent. In quite the coincidence, the Secretary decided that this is what Congress intended only after the election of Joe Biden. Before the election, the Treasury's position was that it could extend the programs if market conditions required it. This was a political decision, one intended to hamstring the incoming administration even as COVID deaths are spiking and the economic recovery is slowing. Let me put it this way. Does anyone think the Treasury would have ended these programs if Donald Trump was reelected? Thankfully, the Biden administration is not bound by the Secretary's decision. The new administration can, and in my view should, restart the programs, reclaim the money Congress has set aside in the CARES Act, and use it to offer more help to small businesses and state and local governments. Thank you, Mr. Chairman.
I will recognize Representative Hill.
Thank you, Mr. Chairman. And Mr. Secretary, thank you and your staff for the extraordinary work during this tragic year of 2020 and all your leadership. Today, we're going to explore the national security lending process under the CARES Act, and I'm particularly concerned about the YRC worldwide loan. YRC has been in poor financial condition for quite some time, and the company's actually been shrinking since 2007. This company has been rated speculatively by Moody's and Standard & Poor's for nearly 20 years and has been hanging on by a thread since the global financial crisis. The only way YRC has survived for the last 10 years is through bailouts by the government and the private equity industry, which we'll discuss more this morning. Based on analysis from your credit memorandum and publicly available investment research, YRC is staying afloat by providing the cheapest pricing, which also means typically the worst service. For context, YRC charges about 18 cents for every pound shipped across the country versus an average of the mid-20s for the rest of the less-than-truckload industry. Having analyzed this data, reviewed the collateral, it makes me realize that were I still in finance, I would not have made this loan. I look forward to our discussion this morning. I yield back.
Thank you, Congressman Hill. Representative Shalala.
Thank you. Secretary Mnuchin, I want to start by thanking you for your service these past 4 years to our country. I also want to add my deep disappointment in your recent decision to terminate these emergency lending programs. I understand that you interpret the statute to mean that Congress intended to terminate the programs on December 31st, but certainly we did not intend for you to prematurely claw back the funds. Treasury has already committed to investing in the programs at a time when American small businesses, cities, states, and workers are still struggling desperately. If the Main Street and municipal lending programs are underutilized, it's because the terms were too stringent, not because there wasn't a need. Keeping these facilities open was projected to cost taxpayers virtually nothing, while closing them puts up a roadblock for the next Treasury Secretary to get our economy back on track. This decision is especially concerning when contrasted with your generosity in the National Security Loan Program, in particular the $700 million YRC loan, which does put taxpayers at a real risk of loss. I look forward to hearing from you.
Thank you, Representative Shalala. All member statements will be added to the hearing record. We will now proceed to Secretary Mnuchin's testimony. At the end of the testimony, we will begin the first of 2 rounds of questions for Secretary Mnuchin. Secretary Mnuchin, you may proceed.
Thank you very much. Senator Toomey, Representative Hill, Representative Shalala, and Commissioner Ramurdi, I am pleased to join you today to discuss the Treasury Department's work on executing the National Security Loan Program established under the CARES Act. Treasury has worked diligently to implement every piece of the CARES Act, including the National Security Program. The CARES Act provided up to $17 billion in loans to business critical to maintaining national security related to losses incurred as a result of COVID. The CARES Act authorized Treasury to make loans and loan guarantees for maintaining national security. The statute, however, does not define that term. Therefore, after consulting with the Department of Defense and the Office of the Director of National Intelligence, Treasury issued guidance on April 10, providing that a company could fall within the definition of at least one of the 3 criteria. Number 1, the applicant performs under the DX, Priority Rated Contract, order under the Defense Priorities and Allocation Systems Regulation 15 CFR Part 700. Number 2, the applicant operates under a valid top security facility security clearance under National Industrial Security Program Regs 32 CFR 2004. Or number 3, based upon the recommendation and certification of the Secretary of Defense or the Director of National Intelligence that the applicant business is critical to maintaining national security, the Secretary of the Treasury determines that the applicant business is critical to maintaining national security. If a company met at least one of these, Treasury conducted a detailed financial and legal review. To date, we approved 11 loans, nearly $736 million. Information on the companies and dollar amounts is on our website, treasury.gov. Many of the companies we initially expected to take part in the program were able to raise funds in the capital markets, leaving most of the funds unused. I urge Congress to reallocate these funds to provide relief for aviation industry workers who continue to struggle through no fault of their own, small business, and other important issues. In conclusion, I'd like to thank the Commission for working with us to provide vital economic relief to American workers, families, and business. I hope that the extensive amount of information Treasury has provided and will continue to provide will be helpful. And let me just say, although the topic of today's hearing is not the 13-3 facility, I'd be more than happy to answer any questions on the 13-3 facility. And let me reiterate that Treasury's obligation is to manage these programs under the law as the law is written and interpreted by us and our legal department, and that's what we've done. And I've never made comments that we would have extended this and changed that view. So thank you very much.
Thank you, Mr. Secretary. So I will recognize myself for my 5 minutes of questions, and I want to give you a chance to explain in some detail how you came to this decision with respect to the 13 facilities. I have questions about the defense lending, but since two of my colleagues have raised this, I feel a need to address this. First of all, let me be very unequivocal about this. Mr. Secretary, you did exactly the right thing. You did what the law required in both ending these programs and requiring a return of the money. I was one of the small number of senators who were in the room with you as we negotiated the specific terms of this. There's nothing ambiguous about this, and had you done anything to the contrary, it would have been outrageous and a violation of the law, and certainly the intent of Congress. This is not speculative on my part. Every single Republican on the Senate Banking Committee signed a letter affirming that you did the right thing for the right reasons. And when you think about what an extraordinary set of powers Congress handed over to the Treasury and the Fed at a moment of crisis, absolutely unprecedented ability to potentially make literally trillions of dollars of credit available. Had you not followed the law and returned that money, canceled these programs and asked for the return of that money, what future Congress would ever give flexibility to a Treasury Secretary and a future Federal Reserve Chairman in a moment of crisis? I want to remind my colleagues, this legislation was passed in March when we were in an unprecedented turmoil. Credit markets were threatening to drive us into a depression. The financial circumstances were worse than the financial crisis of 2008. And so we decided to set up a temporary facility to restore the normal functioning of the markets. That was its purpose: stabilize the credit markets, allow private credit to flow to businesses, states, and municipalities. Well, it turns out it worked even better than we had hoped, at least better than I had. Markets didn't just restore their normal liquidity, they set new records. It was remarkably successful. Now, here's the important thing. We have some folks who think that these facilities should be used as a way to subsidize preferred borrowers, maybe municipalities that have been irresponsible, may even be insolvent. Maybe it's a way to subsidize certain preferred companies that are in industries that are favorably looked upon. That is absolutely not what these programs were for. They were for restoring a functioning market. And that's why the statute called for them to come to an end. And that's why the Secretary did exactly the right thing by ending them. And frankly, it would be outrageous for any future Secretary to attempt to restart them. I have 2 minutes left in my questioning, and so I'm going to turn this over to you, Mr. Secretary, to explain to us how and why you came to the decision you did.
Thank you very much. The decision on the 13-3 facilities? Okay.
Yes.
Thank you very much. Let me refer you to the CARES Act. And there are 3 provisions of the CARES Act that work together. And Senator Toomey, as you know, you recall this because you and I were in the room and we actually drafted this. Senator Crapo was with me as well. I sat with Senator Crapo right outside Senator Schumer's office with Senator Schumer's staff very late that night, going through line by line. So the first part is Section 4029, which everybody can look at, has a December 31st, 2020 date. Obviously, there was some relevance where there would not have been the point of putting in. It's very clear, except as provided under B, on December 1st, 2020, the authority to make new loans shall terminate. It also references 4027. So under 4027, what it says is that if there are existing loans outstanding, we can continue to make advances under existing loans. And then the final part I would just comment, okay, there is a provision that when the money comes back on the waterfall, how it works. I've made no judgment as to whether it goes into the ESF or whether it goes into the general fund. Matter of fact, a lot of it will stay in the ESF as unused funds. For people who think there's another interpretation, the only logical thing is that 4029 doesn't apply to indirect commitments as well as direct commitments, and would imply that money I've put in the Fed, if it were just sitting there, could be used. That was not the intent that you and I discussed. It's not in the law, and if Congress wants to reallocate this money for the Fed, instead of reallocating it for unemployment and PPP loans and others, Congress can do that now. Thank you, Mr. Senator.
Thank you very much, Mr. Secretary. Commissioner Ramamurti.
Thanks. I have questions about the YRC loan, but just briefly to address this point. First, I've heard in many different contexts from my Republican and conservative friends that to interpret a statute, the thing you do is look at the text of the statute, not at congressional intent. And I think there's not an objective lawyer in town, frankly, or in the country that I've heard from that reads the text of the law the way that the Secretary has. And I will say respectfully, I think that my Republican colleagues here and in the Senate felt the same way, because recall in the fall, they offered an amendment to the CARES Act that actually would have terminated the lending programs in January, but that amendment didn't pass. And so I think I'll just leave it there instead of going back and forth on this. So Mr. Secretary, in the CARES Act, Congress gave you the authority to make direct loans to companies critical to national security. By far the biggest loan you have made, for $700 million, or 70 times larger than the next largest loan, is to a trucking company called YRC, which helps the Defense Department ship basic supplies between military bases. So I'm glad that this loan has helped put off job losses and healthcare cuts and retirement cuts for truckers. But it wasn't just the company's workers that benefited from this loan. The company's creditors on Wall Street made out great too. And so I want to dig into why you chose to give such a big and generous loan to this specific company, a company that this commission has said has a weak connection to national security. So at the time that you made this loan to YRC in July, were you aware that Apollo Global Management, a big private equity firm, was YRC's biggest creditor with as much as $600 million at stake?
Yes, I was, but I just want to state for the record, okay, I have consulted with my general counsel. My general counsel agrees with our reading of the 13-3, and if a future Treasury Department wants to break the law and have a different interpretation, Congress will deal with that.
Just on that point, Secretary Mnuchin.
In all due respect, you are not the person who I'm relying upon for legal advice. I have a legal department that I've relied upon, and we are following the law.
I appreciate that. And just to turn back to these questions, but quickly, is that a written memo that the General Counsel provided to you on this topic?
He's provided me verbal advice, and we are going to follow it up with a memo. And if the Commission would like it, once the memo is complete, we're more than happy to.
Yes, I think we'd all agree that that would be a useful thing to have. Okay, so back to the question. You were aware that Apollo was YRC's biggest creditor,
Of course I was.
and you also knew, according to written responses that the Treasury has provided to this Commission, that YRC was likely to file for bankruptcy if it didn't receive a loan from the government.
Yes, I was aware of that.
And YRC going through bankruptcy would have potentially cost Apollo hundreds of millions of dollars. But
That I was not aware of. That's subjective. I never did that analysis.
But-
I think it wouldn't have cost them, but I do think it would have been bankrupt and the company would have fired lots of people.
So, Apollo got lucky because not only did you give YRC a loan, you gave them a great deal, as the commission has concluded, on a bipartisan basis. In fact, even though taxpayers are ponying up $700 million, Apollo, not American taxpayers, gets the first claim on YRC's existing assets if it goes bankrupt. Is that right?
So would you like me to give our analysis on why we made the loan?
No, I just simply want to answer to the question about, does Apollo retain first priority on YRC's
Certain
existing
assets
assets?
it does, and in certain assets we have a first priority lien. So
Only on assets that are purchased using the Treasury loan.
again, there's a
correct?
term A and there's a term B, and there's different collateral. We'd be happy to go through the detailed analysis with you. You can see I brought plenty of information. I tried to, didn't realize Representative Hill was going to have as much as well. I wanted to be prepared.
Okay, I appreciate that. So the answer sounds like yes, that on most of the assets that exist now, Apollo retains first priority. And there are other signs of special treatment. According to a GAO report released this morning, Treasury, quote, did not follow the standard process established for evaluating applications for the YRC loan. The GAO found that Treasury fast-tracked YRC's application even though, quote, Treasury did not fast-track any other applications, though other businesses faced similar circumstances. So again, we have a fast-tracked, extremely generous loan that just so happened to help the private equity giant Apollo. So, Mr. Secretary, were you aware before you made this loan that Apollo has close personal ties to Jared Kushner, the president's son-in-law and senior advisor?
So let me submit for the record a letter from Peter DeFazio and Sam Graves. Okay, let me also submit for the record a letter from Rod Wyden and Pat Roberts. I have many other letters that I'd be more than happy to submit afterwards. But let me just say we had tremendous interest from Congress asking us to expedite this. We also had a certification from the Department of Defense that the loan qualified. So, of course, we were going to prioritize this because, as you said, there was a tremendous risk to the Department of Defense and a tremendous risk to the number of jobs.
So, Mr. Secretary, I understand all of that, but my question was, were you aware at the time that you made this loan that Apollo has close ties to Jared Kushner?
When you say close ties, what's the definition of close ties?
Were you aware that in 2017, Apollo loaned the Kushner companies $184 million? You weren't aware of that? It's reported in the New York Times.
I may have read it in the press at some point, but I'm not involved, nor did I take that into consideration. Nor prior to you asking me that would I have known that.
Sorry, just, Mr. Chairman, briefly to finish up here. Mr. Secretary, can I just ask for, on the record, did Mr. Kushner or anyone from his staff ever reach out to you about providing a loan to YRC?
He or nobody on his staff ever reached out to me.
And so,
Thank you. We'll have another round. Representative.
Thank you, Mr. Chairman. Mr. Secretary, when you received this request from YRC and when the DOD certified that it was essential to national security, were you under an obligation to also determine that the applicant's business was essential to national security, sort of independent of the certification?
I was not. We relied upon the certification. If you have questions about that, you should ask DOD. We published regulations and we followed them.
Yeah. And so in looking at the YRC loan structure for Tranche A, which is the working capital tranche, there, as Commissioner Mnuchin suggested, Treasury's in a junior position there in the collateral pool, and you've also asked for equity compensation to, in addition to the payment in kind interest and the current pay interest on the note. From my review of the collateral pool, it does not look like it's at all adequately secured for covering both Apollo and Tranche A plus. And I just would ask your view, did you look at the collateral pool and do you believe that the collateral protected the American taxpayers?
The answer to that is yes. We did a thorough analysis of the collateral pool. We consulted with Perella Weinberg, who was our financial advisor on this loan and all the national security loans. And let me just comment, we did get equity, and our equity is currently worth $100 million.
That's because the stock has increased, because the Treasury now has made this loan, and I agree the company was certainly near bankruptcy before the credit. When I look at the collateral pool, it's stated in the Wassertein-Perella material, it's at $1.5 billion, securing $1.3 billion in debt. So in that sense, the face of it, using book values that Wassertein-Perella had, it's covered. But of course, when you underwrite a loan, you don't use book value and 100 cents on the dollar. When you look at collateral pools, you would discount it based on normal business conditions and underwriting. And when I look at the accounts receivable, they were given 100 cents on the dollars instead of, say, 80 cents on the dollar. When I look at the real estate value, it was given 100 cents on the dollar valuation. And then in the existing fleet, which as noted in Tranche B lending, the YRC fleet is old, and that's what these collateral documents cover, all the tractors and trailers. And when you look at that, there's no way that it's worth the face value of $312 million. So my point is, when I look at that, I find a collateral value about $1.1 billion, so under the combined lending amount. I just would urge Treasury to reassess that collateral. I think you're vulnerable there, and if this company doesn't hit its projections, then your equity value, which does have a positive gain now, won't in 4 years. What's your reaction to that analysis?
Representative Hill, let me explain to you that I was chairman of a bank, an OCC bank, and I'm the first one to say if my bank had been underwriting this loan, we would not have made this loan. So let me be clear. The purpose of these facilities, now that doesn't mean I don't think we're secured and we'll get our money back, but as you recall, both Congress and outsiders encouraged us to take losses. So when we did the initial analysis, we're not in any way saying this was a market loan. Matter of fact, had it been a market loan, the Treasury would not have been involved. Now, I do believe that ultimately Treasury and the taxpayers will be very well compensated because the economy came back quicker than people thought, and the business has come back quicker. We analyzed it, and in many scenarios, we thought we would lose money. And again, I'm happy to submit letters for the record from both Republicans and Democrats that encouraged us on Main Street that we should lose money. This loan was priced at a premium to the Main Street pricing. This loan, I wasn't operating a hedge fund at Treasury. I wasn't operating an OCC bank. I'd be more than happy to go through our financial
Let me reclaim my time. Thank you for that view. When you look at this company, it's been bailed out before under pressure from Jimmy Hoffa and the unions in 2008, 2009. Banks were compelled by government intervention and the Treasury then and Congress then to bail this company out in a debt for equity swap in 2010. And despite having all of its debt wiped out then, the same important characteristics, this company finds itself exactly in the same position before the pandemic. So let me yield back, Mr. Chairman, but I still have concerns about this credit.
Thank you, Representative Hill. Representative Shalala.
Thank you. I think I'll slightly change the subject. The CARES Act requires borrowers under the National Security Loan Program to maintain its March 2020 employment levels until September 30th, 2020. Treasury contractually extended this requirement in the National Security Loan documents. Why did Treasury extend unemployment level requirements in this program, but not in its airline loan program? And also, why didn't it work with the Federal Reserve to impose employment level requirements on the other lending programs like Main Street? And why did Treasury only extend the requirement through September 30th, 2021 in most cases? Why not for the entire duration of the loan? And how did Treasury ensure that none of the borrowers reduced their employment levels prior to getting a national security loan? And how will Treasury monitor the borrower's compliance with this requirement on a go-forward basis?
I'm
Secretary?
happy to answer all the questions, but since there were a lot of them, I'm not sure I did, so maybe I could do them one at a time.
Okay.
Okay, and I may ask you just to repeat them. But let me do the last one, which I just recalled. How will we monitor? We have hired a group of dedicated people at Treasury who will be responsible for monitoring all the direct loans. So whether it's a national security loan or an aviation loan, those will be monitored and go through a quarterly certification process with appropriate people. If you just want to give me the rest of
Yeah,
them.
the first question was about the employment level requirements in the National Security Program that were not extended in the airline loan program.
I don't want to defer the question, but we're happy to follow up with you. It's a highly technical issue. The intent of all these programs, well, the intent of the direct programs clearly was that companies shouldn't terminate people if they were taking these programs. There was a unintended consequence in some of the contractors' programs, which again is somewhat technical. I'm happy to follow up with your office on.
Yeah, I'm happy to have your follow-up. I don't see what's technical about, you did it in the National Security Program, you didn't do it in the airline employers.
We did do it in the airline employers. There was a difference between the contractors. Again, in the case of the contractors, it took a longer period of time. But once people entered into loans, there was that commitment.
Okay, and on the second question, why did you only extend the requirement through September 30th, 2021 in most cases? Why not for the entire duration of the loan?
I believe that was. Yeah, YRC was extended a year behind the legislation, but I believe what you're referring to was there was a requirement in the legislation. And other than YRC, I believe we just followed the legislation.
But you could have protected employment through the duration of these loans.
We could have, and had Congress intended us to do that, it would have been written in. YRC was the one situation because it was such a big loan. We felt a need to add it on. And I think you asked me a question about Main Street, why that wasn't included. Again,
yes.
There were very specific discussions in the crafting of this with the Finance Committee, and there was a requirement, what I call kind of the Warner provision that was added, but specifically the Main Street program, because it wasn't a direct loan program, there was a desire to get the money out without that requirement. That was specifically discussed with both Republicans and Democrats in the Senate.
I yield back.
Thank you, Representative Shalala. We'll begin now our second round of questions, and I will begin. Mr. Secretary, the CARES Act states that Section 4003 loans are, and I quote, to provide liquidity to eligible businesses, ellipse, related to losses incurred as a result of coronavirus, end quote. So certainly we're familiar with many businesses in many different industries where they have had losses that result from lost revenue, from the revenue they would have otherwise had. And certainly it's plausible that companies would have higher expenses in dealing with this coronavirus. But it appears that a majority of the firms that receive these national security loans projected COVID-related losses to be greater than their entire 2019 revenues. That just seems a little bit odd. And based on the limited information that we have been able to see, it appears that at least two of the companies that receive these loans are essentially startups and appear to be either entirely or very nearly pre-revenue companies. Spin Launch, for instance, is a tech startup with, my understanding is, thus far commercially unproven technology still. Ovio Technologies, a software company, and the loan amounts for both of those companies were substantially greater than their entire 2019 revenues. So could you shed some light on how these loan amounts relate to the losses they incurred as a result of the coronavirus if they weren't forecast to have any revenue anyway, or perhaps suddenly in 2020 they were supposed to be revenue positive. The information that we got does not shed any light on this. So could you tell us how this slightly counterintuitive circumstances make sense?
Senator Toomey, let me just first say, as you said in your opening comment, the good news is that the market's recovered, and so many of the companies that we thought we'd have to make loans to were able to borrow in the markets. Companies like Boeing and GE that we thought were going to be major military contractors. So the good news is we only ended up with 74 applicants. Of the 74 applicants, we only approved 11 of them. So, I mean, as you can see, we rejected plenty of loans. What we tried to do was establish a process so that we weren't picking winners or losers. The criteria was there had to be a designation or one of the specific criteria for national security. When it did that, we put it through a credit underwriting, and there was credit determinations both for some of the smaller ones on an unsecured loan and some of the bigger ones. As you said, you know, the intent was supposed to be COVID. When COVID impacted the entire business, it was very difficult to figure out COVID versus non-COVID, but we made sure that the loans fit our credit criteria and rejected many that didn't. But I understand your comment and, you know, would be happy to follow up with you on it.
So my understanding is that there is some backup information that would get into some of the details, such as whether a company that had zero revenue in 2019 was actually projecting revenue in 2020 that did not arrive because, you know, maybe their contract was with the municipality that canceled the contract. So it's entirely plausible, but we can't see what happened. So if you can provide us with additional specifics on these applications, that would be very helpful.
Be happy. There's a credit memo on every loan. We're happy to provide it with you. And again, on the objective criteria we provided to do it, on some of the things that you're talking about, it was a little bit harder to differentiate what was COVID-related, what was not COVID-related when the businesses were highly impacted.
Thank you. Commissioner Ramamurti.
Thank you, Mr. Chairman. Just to pick up where we left off last time, Mr. Secretary, you mentioned that there had been no communications with the White House or Jared Kushner about the YRC loan. So can you commit now to reviewing all of the documents in your possession and turning over to this commission any correspondence, including phone call notes and emails, with the White House relating to YRC? And if there's none, that's fine, but can you commit to doing that?
Actually, I just want to correct the record. You didn't ask me about the entire White House. You asked me if there was anybody on Jared Kushner's staff or Jared Kushner that I spoke to, and the answer to that was no. I did not respond to the entire White House.
Okay, but in terms of the question I just asked, are you willing to turn over any of the correspondence you may have had with the White House on this topic?
You have to ask me what's the question, because you're now asking me a different question than you asked before. I just wanted to correct it. But yes, any correspondence that related to Jared Kushner or his staff, which are none, I'd be happy to turn over, because that doesn't exist.
Okay, the White House more broadly, however?
I consult with our legal department. I think, as you know, we have certain privileged things with the White House.
I understand, but thank you for taking a look at that, and we'll follow up on that. Look, I think at best, this is a loan, as some of my colleagues have said, that puts nearly $1 billion of public money at risk with minimal protections, and that helps a private equity giant that was sitting on billions of dollars of its own money. And at worst, I think this generous loan was rushed into place to benefit a firm with close personal ties to the president's family, and I think that this warrants further investigation by this commission. So I want to take a look at some of the national security loans other than the YRC loan. Of course, none of them are nearly as big as the $700 million loan to YRC, but the GAO report that came out this morning raises some concerns about the process. So as you noted, the Defense Department has certified 20 companies as critical to national security, and you have provided loans to 11 of those companies. And I just want to understand why you chose to support the companies that you did. Those 9 companies that have been certified as critical to national security but that have not yet received loans, are you currently negotiating with them on loan terms, or what's the status of those 9 companies?
Yes, so first I just want to say on the first part, again, although I think because the economy has recovered, taxpayers will do very well on this loan, I want to acknowledge this was a risky loan. I also want to say our intent was not to bail out any hedge funds. If we want to be criticized, perhaps it's the influence from many of the Democrats who wanted us to save union jobs. And again, we were very focused on saving jobs because this was a national security loan, which was the intent of the program. I think your other question is the program's over, it's done, there's nothing else left.
So you're not currently in negotiations with those 9 companies?
No, everything's finished. The Treasury approved 11 loans, and there's no other loans, and I encourage Congress to reallocate the money.
So these companies that were found to be critical to national security, what is the status of them? Have they all gotten support from the private markets, or what's the situation?
I believe they didn't pass our underwriting. Again, it was, again, very simple. Companies either passed or didn't pass the underwriting.
Assistance in a timely fashion. So for comparison, the YRC loan took you 70 days from application to execution. The next fastest loan you made took nearly 2.5 times that long, with applicants having to wait 5 or 6 months for those loans. So why did it take so long for you to get aid to those companies that were deemed critical to our national security?
Well, I think that's a reasonable criticism. I just want to put this in the context of Treasury had huge obligations as a result of the CARES Act. We had to create a PPP program with SBA from scratch. We had to do payroll support loans. We prioritized the aviation industry over national security, again, given the number of jobs there were in the aviation industry. So had we had more resources, a lot of the people at Treasury couldn't come into the building. So yes, I feel badly that it took us as long as it did, but we executed a lot of programs in record times. And yes, obviously, as it related to the national security, once we got to national security, we prioritized the larger loan over the other ones. But
Thank you. One other question. The GAO specifically notes that you approved the YRC loan while your internal program guidance was, quote, still in draft form and subject to change, and that your incremental approach to finalizing the program rules, quote, may have weakened the consistency with which Treasury reviewed and analyzed loan applications. So did you use the same application review process and criteria for these other loans that you applied to YRC?
I would say we're happy to respond in writing to the GAO issue, and we'll copy you on that.
Thank you, Mr. Secretary.
Thank you, Commissioner Ramamurti. Representative Hill.
Thank you, Chairman. Mr. Secretary, I want to read you some quotes here from a news article, Associated Press. Quote, publicly traded trucking company, YRC, will ask for $1 billion in aid from the federal bailout fund, close quote. Shares of YRC have, quote, plummeted, close quote. Those sound familiar, and they might sound like they're from a post-CARES Act headline, but they're actually from the Associated Press, May 15, 2009. Later that year, banks and investment banks were compelled to do a debt-for-equity swap with YRC, led by their union, Jimmy Hoffa, speaking on behalf of organized labor, pressing them, saying that he was successful in getting this done in Washington. When you were reviewing this credit application, were you aware of this debt-for-equity swap and the trouble YRC had at the end of the financial crisis?
I believe the team was. I was not specifically aware of that.
So in addition to the valuation questions on the collateral pool I talked about, I wondered if the team had had conversations with the other senior creditors for Tranche A on a different sharing arrangement before you agreed to the terms.
Well, I can tell you, I obviously had discussions with other creditors because we needed inter-creditor agreements and other issues. I personally don't recall any of those conversations. Adam Larrick, who led the team, was here and can follow up with your office. And again, let me just reiterate, Representative Hill and others, this was a risky loan. We've been fortunate that the economy recovered and that the equity is doing well. And I am going to recommend that next year, whoever is Treasury Secretary, seriously look at selling this loan and recovering what I think will be a profit to taxpayers, because this was a success, but we do not want to be in the long-term business of lending to this type of company or any of the national security companies. But Fortunately, we've made a significant profit, and taxpayers should get paid back.
Well, I appreciate that, and we'll be having a meeting, the Commission will, next week with the Department of Defense, because the whole issue, when you look at this underwriting situation, you have to ask yourself, why did the Pentagon get dependent through its prime contractor, Crowley, for 68% of its less-than-truckload needs on a company that was essentially near bankruptcy and has been in, as I say, junk financial condition for 20 years? I find that not a Treasury question here, and I respect that, but certainly a question that this Commission will be interested in when we meet with the Treasury Department on why the DOD would be so dependent on such a weak company when there are many companies, including union companies, for my friends on the other side of the aisle, that have tremendous financial strength that provide LTL services. What recommendations would you make now, having gone through this CARES Act, when it comes to drafting this kind of language in the future for future Treasury secretaries? Would you have a different caveat than simply having the DOD secretary certified that a company is essential to national security? And in your personal view, do you think a LTL trucking company is essential to national security?
Let me just say, if I had to do it all over again, I would use the same criteria. Again, I think the intent when we did this was there were going to be some big companies, but again, we set up the intent early on. It's not my position to comment on the DoD certification, although I will make a comment that I do agree with. I hope that the Pentagon looks at all of their critical vendors and looks at the financial condition and spreading risk. Had they not had this type of exposure, perhaps they wouldn't have certified it.
I think that's a fair point, and I yield back, Mr. Chairman.
Thank you, Representative Hill. Representative Shalala.
Thank you. I want to follow up on that definition. How did Treasury create its definition for national security loans? Did you consult with the Department of Defense and the Director of National Intelligence or anyone else?
We did. As I said in my opening statement, we consulted with them before we put out the regulations.
The language of the definition that the Treasury Secretary determines that the applicant is critical to maintaining national security is based on a recommendation and certification of the DoD or DNI implies that Treasury has the final say in which businesses are designated. Is that really the case?
From a technical statement, it may be the case, but from a practical statement, we did not second-guess the DNI or DoD, so we did not do additional diligence.
So you didn't ever disagree with the DoD on designations?
We did not. We relied upon it, and I have written certifications from the DoD. I'd be happy to put them in the record, but once we received them, that was their expertise. We don't have the expertise at Treasury to analyze that.
Do you think that the definition or the alternative process requiring certification by DoD or DNI deterred business from applying?
I don't.
Finally, let me, you've been actually quite candid about what you would do in the future. While I have serious questions, along with my fellow commissioners, about the National Security Loan Program and the YRC loan in particular, clarify for us, looking back, would you do it all again? Would you do something different with the YRC loan or the lending program or really any of the other emergency loan programs?
So I just want to put this in context. The Congress allocated close to $3 trillion for CARES-related items in the most difficult part of the economic environment that this country has faced since the Great Depression, not recession. Of course, in a different environment, we can look back and hopefully in future times Congress can do different things. I would just say on the $500 billion that was allocated to me between direct and indirect, we could have made $5 trillion of loans. This was an enormous amount of responsibility. I've been criticized by the right. I've been criticized by the left. There were people who said to me, I weren't taking enough losses. There were people who have said to me, I have taken too many losses. Again, I think this has been a great success. The good news is most of this money didn't need to be used and can go back for taxpayers. And Acting Chair Toomey, I'd be happy, since it's such a small group today, to take a third round of questions. I want to make sure that the committee has as much time for oversight as is needed for us to be able to answer whatever there is today.
Yeah, I'm reclaiming my time. I just want to, I want to make sure that I understand, because we need to learn from your experience with these loans. What would you do differently in the national security program in particular that you would recommend to us that should be included in legislation, for example, so that we don't get a YRC in the future?
Well, again, you're assuming we shouldn't get a YRC in the future. You know, as I've said, there are plenty of people who are very senior people in Congress on both sides, Republicans and Democrats, that encouraged me. I'm actually quite proud of the fact that we did YRC. It saved lots and lots and lots of jobs. And I can tell you I've received calls from the company, from truckers, from other people who really appreciate this. So I actually expect that taxpayers will get back their money, will make money. I can tell you the original concept of the national security loans was for critical suppliers, and we thought we were worried about Boeing. I can tell you Senator Warner came up with the idea, which I thought was a great idea, of there would be small companies that had top secret clearances, and we didn't want them to go out of business and have all these people disappear. So I actually think the program's worked. And again, I'm more than happy to stay here, so nobody needs to worry about reclaiming their time. I want to make sure you have more than enough time to ask me questions.
Thank you. I yield back.
Thank you, Representative Shalala. So my understanding is the House has called a vote. And if, so I do not have further questions, so I will pass on another round for myself. But with the unanimous consent of the four of us, I would suggest we give Representative Hill and Representative Shalala additional time, if you would like to take it now, so that you could use that time and still make the vote. And then I would then recognize Commissioner Ramamurti. Is that okay? Okay. Representative Shalala?
Just a statement. I realize that you get enormous pressure from members of Congress. And as someone that had to sit in one of those seats at one point and say no to members of Congress, sometimes we're right and sometimes we're wrong. And we rely on the judgment of the secretaries to make those decisions. And sometimes moving too fast under great pressure is dangerous. And so I just want to put that on the record, that I think your answers to the questions about how you manage this are fine, but I'm not impressed when members of Congress are putting cabinet secretaries under pressure, because I rely on all of you to make a good judgment on whether you have the time to make the right decision. Thank you.
And I would just agree with you, and we don't make decisions solely based upon pressure, or we'd have made thousands of loans. I would merely, again, just highlight, of the 74 loans, we only made 11. We turned down lots of loans that had Congress write us letters. And again, I appreciate the opportunity to answer any more questions you or others have.
So I will now recognize for an additional 5 minutes Commissioner Ramamurti.
Thanks. This should not take the whole 5 minutes, but I just want to, since it came up today, talk through the termination question again. So the way that this program works, right, is that the money that Congress authorizes goes to the Treasury Department. The Treasury Department makes a loan or an investment into a special purpose vehicle created by the Fed, and then that special purpose vehicle in turn makes loans to the public or to Main Street businesses. Is that right, Mr. Secretary?
As it relates to the Fed facility, that is accurate.
Okay, so basically there's a two-step process here. There's a Treasury investment into a SPV created by the Fed, and then there is a set of loans that goes from the SPV to the public. Now, what the CARES Act says is that after December 31st of this year, there can be no new investments with that money by the Treasury Department. So how do you get from that text to saying that there should be no new loans by the Fed using money that's already been invested by the Treasury Department?
So, Mr. Commissioner, and again, I'm happy to spend as much time as you want on this, the Treasury put up 100% of the equity in the SPV, okay? That SPV is owned by the Treasury Department. That SPV is governed by a term sheet and an LLC agreement. So our view is that the requirements are both direct and indirect, so that, again, and let me just be clear, you've described an alternative reading. So if one viewed that alternative reading, that would have meant that I could make $500 billion of investment on day one. And if you believe that reading, that would mean that there would be no December 31st date. I would say that's just a preposterous interpretation. If that had been the case, Congress never would have put in the December 31st. Your reading, which certain people have read, is an obvious loophole, okay? Again, if someone else wants to take that reading, which I think is not the legal interpretation, they can do that. I'm not going to do that. I was trusted by Congress with $500 billion. Lots of Democrats came out and said, how could the Treasury Secretary have a slush fund? I will responsibly read the letter of the law as interpreted by me and my general counsel and fulfill the obligation. And by the way, if Congress wants to extend these programs, Congress has every right to do that. Now, I would also just add, because Senator Toomey was the person who I believe asked for the amendment to be put in, and Senator Toomey, I'll let you speak, but in our conversations, you were concerned that someone could somehow or another interpret a loophole that was not intended of what we negotiated, and I think it was a belt and suspenders. It wasn't an acknowledgement that that was the right reading, but Senator Toomey, I'll let you speak for yourself.
Well, I want to let Commissioner Ramamurti finish his time if you'd
Thanks, I
like,
appreciate that.
and then I will respond to that.
Sure. I mean, look, what you, number one, it seems like what you are saying that it is a valid and credible reading of the statute to read it, the alternative.
I'm not. I want to correct that. I have never said it's valid. What I'm saying is, if that's your reading, okay, which certain people have said, I'm not saying it's valid. Matter of fact, I want to be on the record. I think it's invalid. Our general counsel thinks it's invalid. Every single Republican on the Senate Finance Committee that was involved in this thinks it's invalid. Again, it would be if one takes that interpretation, it would have to be an obvious loophole. That's what I'm saying.
So look, I think what you call a loophole, I would call the plain reading of the statute, and I think that
Mr. Commissioner, were you involved in the drafting?
No, but look,
Okay.
the whole point of this.
Have you got outside legal counsel that advised you on the drafting?
Yes, I think there have been
Okay.
several law professors who have looked at
Just
this.
as you asked for us to have a memo, we'd be happy for you to get an outside legal opinion, send it to us. I'm happy to have my general counsel review it and respond to you.
Okay, look, my point is that there have been several finance lawyers who have looked at this language. Look, they weren't in the room, but that's why we look at the text of statutes, not congressional intent. I hear that from my Republican colleagues all the time.
You acknowledge it would be a loophole?
No, I don't. I hardly think it's a loophole. I think it makes complete sense for Congress to create a program that says.
Why, if there's a December, then what was the intent of the December 31st?
Sure, I'll explain what I think is a reasonable interpretation of the statute. As of December 31st, the Treasury Department cannot create new facilities with this money that was allocated by Congress. Separately, Congress said in the very same statute that the money remains with the Treasury Department until 2026, at which point it goes back to the general fund, which to me indicates an intent of Congress that the money should remain available to the Treasury Department up till 2026, which to me contemplates this program existing well past 2021. That is in the statute. And I think that if you look at the Fed's response to your letter asking for the money back, it's quite clear that they don't agree with your interpretation of the statute either. They are deferring to it, but they said that if it was up to them, they would extend these facilities. So I know I'm over my time, but that's all I wanted to say. Thank you.
Senator Toomey, can I just make one
Secretary
comment?
Mnuchin.
I just want to correct the record, and you can speak to Chair Powell or the Fed, but since I speak to him all the time, and we've spoken, what the Fed has said, okay, the Fed has not said that's their interpretation of the legal view. What the Fed has said is that if there were no restriction, as a general matter, they like to leave facilities outstanding. And that's why, as deferential to the Fed, the facilities that used pre-CARES Act money were extended. And obviously, if this was politically motivated, why would I have extended any facilities?
Thank you, Mr. Chairman. Let me comment on this discussion briefly. First of all, I think the alternative interpretation of the statute that Commissioner Ramamurti has articulated is not the correct interpretation at all. And I do think it is important to point out that it would necessarily lead to an absurd outcome. Absurd in the context of the clear fact that the entire purpose of this facility was to solve an immediate credit liquidity crisis, not to provide an ongoing multi-year set of tools for the Fed to decide whom to subsidize in the future. The latter never crossed anybody's mind in the room, I can assure everybody of that, and in my interpretation, the letter of the law correctly calls for this to end. So Commissioner Ramamurti asked the question, then why the amendment that changes language in a recent piece of legislation? That was my amendment, and the reason I want it is precisely because this argument is taking place. Precisely because there are people out there who have this other interpretation. And I would rather avoid the risk of having to litigate, which is what would happen if somebody, a future Treasury Secretary, for instance, decided that this invalid interpretation was the one that was going to govern their behavior. We would be mired in litigation for who knows how long if someone were to go down that road. So I thought the best and simplest solution is eliminate even the possibility for this, which I believe to be invalid interpretation. That said, Mr. Secretary, thank you for joining us on behalf of the Congressional Oversight Commission. We appreciate your time and responsiveness. Members of the Commission may submit any additional written questions for the record. The hearing is adjourned.